there. Good morning, everybody. Thank you for coming today for Making Budgets Work with Edwin Urbieta. My name is Emily. I'm the office manager here at Elderwerks. And just a little bit about Elderwerks before we get started. We are a not-for-profit 501c3, and we assist seniors in finding senior living options. And we also help provide resources to help them age well at home. And we're also advocates for seniors going through any type of situation. And we do education such as this for consumers as well as professionals. So if you ever need anything senior related, feel free to reach out to us. And we're always happy to help. Our office is located here in Palatine, 251 East Northwest Highway. So our hours are Monday through Friday, 9 to 5. You're welcome to stop by and say hi or check in if you need anything. We also have our resource directory. It's available online, and it's also available in the printed version at our office. And we also have a variety of different locations that also have our directory. So if you're interested in getting a directory, if you don't have one, you can give us a call and we can help direct you to the right place to get a directory. So if you have questions throughout the presentation, please put them in the chat. And then we'll have some time at the end too to go over anything additional as well. So without further ado, I'll go ahead and turn it over to Edwin. Thank you.
Thank you so much. I appreciate it, Emily. So I'm Edwin from BMO Bank. I've been in banking for a little bit about myself. I've been in banking for 21 years. Prior to banking, I was a financial rep for 2 years. In those 21 years, I was a branch manager, I was a banker, and I'm now a regional relationship manager as well too. So what I do is I do presentations similar to this one right now. I also wanted to introduce to some of my colleagues. Wanted to see if Christina, are you out there?
Yes, I am, Edwin. Thank you.
Perfect, Christina. If you want to go ahead and introduce yourself as well too.
Yes, my name's Christina Cantori. I've been with BMO for over 2 years, but I've been in the financial industry for over 23 years. In my current role, I'm a senior relationship manager with our Premier Banking Services. I work with clients one-to-one, whether individuals or families at various stages of their financial life. Primarily, a lot of my clients are either pre or post-retirement. And a lot of what I do with my partners here at BMO is ensure that there is a sound financial plan in place, particularly like here looking at how to work a budget, live to a budget, and not only what you need, but what you want and other extended goals and wishes for extended family and leaving a legacy behind. So I bring forth my background personally and professionally and all the clients that I've worked with to ensure that we're listening to our clients' needs and providing custom solutions particular to what the clients are looking to accomplish. So thank you for letting me join.
Thank you, Christina. I know Nate was a little bit tied up today. Do you know if he was able to join Christina by any chance?
I'm not sure. We have a couple different offices that we're covering, a little bit of overlap because of the summer holidays.
Yes.
But I do have an investment background as well. But Nathan is our financial advisor and certified planner who I partner with one-to-one for a lot of our clients. So usually I'm the beginner and then I bring them in and we continue the relationship dynamic. So I'd be point one of two.
Thank you, Christina. So today we're going to talk about making budget work. So now, a lot of you might be good with budgeting your finances. Some of you probably need help, or some of you probably wish you guys would have done something different throughout the years as well too. So as we're doing the presentation, think about your kids, think about your grandkids as they're coming to you and they're asking you questions about what you did to help you for retirement, or what you could have done differently as well too. To prepare for retirement as well. So start thinking about those type of scenarios. You know, a lot of times our kids, our grandkids might come up to us and ask us about some of the concerns that they have financially as well too. Now, I wanted to share a story with you guys about 10 years ago. Christina mentioned how she's a senior premier banker. 10 years ago, I had a premier banker and I had a financial advisor who was helping their clients, one specific client, helping them throughout the years, budgeting, saving money for retirement. As the years go by, the client got really sick, and he came up to the premier banker. He came up to the financial advisor about how he was sick and he didn't know how much time he had left. Well, what they did was they made sure they told him, let's verify that you have the proper beneficiaries in your accounts. Let's make sure that you have all your finances together, so your family have access to those funds as well too. A few months go by, and a family comes in. The family comes in, and they really wanted to, they brought to the premier banker and the financial advisor's attention that they found their business card and a picture of the premier banker and the financial advisor on the client's refrigerator. That was really heartwarming because the client really wanted to make sure that the family knew who he was working with. And obviously the family trusted the premier banker and the financial advisor, so they kept on working with this premier banker, this financial advisor. But that was the relationship that a lot of premier bankers and a lot of financial advisors have with their clients. It's they help them budget, they help them with their finances as their years go by, as they're preparing ready for retirement. So today I wanted to talk to you guys about taking a look at your finances, taking a look at the overall picture. Okay, first we're going to start with what is budgeting? Well, what is budget? Budgeting is a process of creating a plan to spend your money. Okay, so what you do is you create, it gives you a clear picture of where your money is going, and it helps you create a plan of how to overcome some of that budget issues as well too. It helps you live within your means. It helps you pay down some of your debt as well too. It basically setting up a plan. It helps you save up for your future and emergencies. One thing I wanted to bring to your attention about the future and emergencies is in the last few years, especially a lot of small businesses, they realized how critical it was for them to start saving money. I'm not talking about the corporations, but a lot of the small businesses years ago, when they used to come to the bank, a lot of times they would just open a business account, not necessarily focus on the budgeting, because a lot of times what they did was a lot of money came in, they spent a lot of money and that was how they were running the business. But in the last few years, they realized how critical it is to save money, how critical it is to budget, and saving for those emergencies in case something else happens again, where they're going to need some of those funds to be able to relieve some of that stress. Okay, as we get older, one of the biggest things about when you're young, you realize you start thinking that budget is not critical at a young age, but in reality, when you start sooner, you do have a lot more money saved up for retirement. So the sooner you start, the lot more beneficial it's going to be as you get older as well too. Why we don't budget? As I shared with you earlier, I don't want to think about the future. That is a common thing that a lot of younger people start thinking is, I don't want to think about it. I'm still too young. I'll start thinking about that as I get older. And again, I've been in banking for 21 years, and this is something that I definitely saw a lot throughout the years, where people would go ahead and say they were too young, and as they got older and older and older, they realized that had they started sooner, they would have had a lot more money now. So as your kids are coming to you, as your grandkids are coming to you, when they start asking you, when should I start saving? Well, the answer is now. Obviously, unless you're in high school, unless you're in grammar school, or unless you're in college. But in reality, the answer is you start now. If you start now, you'll have a lot more in the future, especially when it's compounding throughout the years as well too. Why we don't budget again is a lot of people think it's too complicated. It takes too much time, and it could take a while to start budgeting and doing it the right way. I have a son who's in college, and my daughter is she's right behind him, but she's 4 years apart. So by the time my son, actually she's 8 years apart, but by the time my son graduates from college, she'll have 4 years. So that gives me 4 years to prepare a lot more for her as well too, and paying off some of that debt that I've been accumulating while he was in college for his school. My income and spending is not consistent enough. I rather just keep doing what I'm doing. I have no self-control. It's another reason why people don't budget. Budgeting causes more stress than it's worth. Yes, a budget can definitely be a little bit stressing, but the other one is debt. Debt can definitely be stressful, and a lot of times, debt can also cause conflict within a marriage as well too. So one thing I always tell people is it's critical to start budgeting because that also creates a lot of hassle as well too. It's a hassle. I can't keep up. So why even start? Obviously, if you don't start now, then you should start now just to budget. Now, there are 3 sets of goals, okay? There's the short-term goal, paying off credit cards, setting up emergency savings, saving for vacation. This is a short-term goal of less than 3 years. Now, I'm going to share with you guys my personal goal in less than 3 years. My personal goal in less than 3 years is to go to the World Cup. The World Cup in 2026. The reason why, I'm not a big soccer fan, but the World Cup is going to be in the US, Canada, and Mexico. So obviously, I want to be able to attend the World Cup. And what I'm doing is I'm putting, I want to go to 3 games. Now, what I'm doing is obviously I don't want to use the funds of my family. I don't want to use funds that my wife is using to buy things for the house and things like that. So what I'm doing is I have a bucket, kid you not, a bucket. And what I'm doing is I'm putting coins in that bucket and I'm saving it for the next few years. And as the years go by, whatever I have in that bucket is what I'm going to use for the games, for the World Cup games. If I can save enough for 3 games, great. If I can save enough for 2 games, great. If I can only save enough for 1 game, then that's what I'm doing. That's how I'm budgeting for the World Cup, for me to be able to go to this soccer game. Midterm goals is 3 to 10 years, buying a car, a down payment on a home, paying off a debt. Long-term goals, that's 10 years plus, that's saving for retirement, paying off a mortgage, creating a college savings plan. Now, I'm going to share with you guys again my midterm goal. My midterm goal is to move from my house to another house in 7 years. And then my long-term goal is retirement in 12 years. In 12 years, that's when I want to go ahead and retire. But I wanted to ask the group out there, I wanted to ask you guys, do you have a goal, set either short-term, midterm, or long-term goal? And what have you done to be able to achieve that goal? Does anyone want to share a goal that they have out there and what they have done to achieve that goal?
Hi, I would like to share. Can you hear me? My name is Silk Williams.
Yeah, so we can hear you.
Okay, just to let you know, I'm going to tell you about the goal that I set and what I accomplished. So I set a goal to retire at 56. Yeah. And just to let you know, I did accomplish that goal. But how I accomplished it, I had a plan. I wrote it down. I prayed about it. And then how I orchestrate the plan, I went to retirement seminars.
Yes.
I looked at any debt that I had. I made sure all the debt that I had was paid off. In the meantime, I had set up an emergency account, just like you said. Mm-hmm. But before all of this, I made sure I had several bank accounts, one for vacation, one for retirement, one for emergency, one for college, things of that nature. But at the end of the day, just like you said, you have to write it down. You have to have a goal. You have to have a plan, and you must stay focused. At the end of the day, I don't have to go back to work. I'm not bored, but if you get bored, it's okay. But just make sure that you can live off of that income once you have set your goal to retire.
Yeah.
But do your research. Yeah. So I didn't wait until 2 weeks before retirement to go to the pension board. I went ahead of time. I wanted to know what my income was going to be. I got all of my documents together. I went to each bank. And like you said, with your bank accounts, I put my beneficiaries down because I'm looking at life. I'm still living, but I'm also planning just in case something happened. So yeah. That's what I wanted to share with you all. It can work, but you got to stay focused.
I love it. I love it, Silk. You mentioned a lot of critical information. I'm going to point out 2 of them. One is setting up a plan. It's really critical that you do set up a plan and you budget for that retirement age. She chose 56 years old, she had her plan set up for that retirement age. And she mentioned multiple banks. She mentioned that I personally have 3 banks. Okay, I bank with 3 different banks. I'm not going to mention the 3 banks. Obviously, BMO is one of them. But I have another one where it's my everyday usage, and my money goes in, my money goes out. Okay, with BMO, it's mostly for my mortgages, mostly for my kids' activities, things that I know that there has to be a solid amount in that account. And then money goes in, so I have to have a certain dollar amount in that specific account. But I have a third account. My third account is my vacation money. My money, I don't have easy access to this money at all whatsoever. It's in order for me to be able to withdraw funds from that bank account, I have to go to that bank and be able to withdraw those funds as well too. So I don't have easy access, and I did that on purpose. I didn't want to have easy access to this funds because that's my vacation money. But I love, Silk, how you share that, how you mentioned that you have multiple banks. Nowadays, people do bank with more than just one bank as well too. And then you also, again, you mentioned setting up a plan. This is why it's really critical that you do talk, whoever your bank is, you talk to the representative there. If they have a premier banker, talk to the premier banker. If they have a financial advisor, talk to the financial advisor. Set up a plan. Let them know that what your goals are. Your goals are to retire in 10 years, 15 years. Let them know that so they can take that into consideration. And they're going to give you advice of where you're at right now and if you're on pace to be able to retire. Because one thing that they're going to ask you is, well, what is the comfort? How comfortable you want to be living when you do retire? And then you just let them know exactly how much you want to make on an annual basis when you retire, and they're going to help you set that plan out. They're going to tell you whether you're on pace or what other things you need to do to be able to get it on that pace as well too. So great. Anybody else wants to share? I know it was pretty tough coming from right after Silk's goal setting as well too. But no, thank you so much, everyone. So now let me go ahead. How can I get organized? Before creating a budget, organize your financial documents, all your sources of income, a record of your average monthly expenses, if possible. Keep track of your expenses for at least 3 months so that you know how much you spend on each item on average, a list of your debts. Now, let me ask the group a question. In addition to creating a budget, why is this also important? So in addition to creating a budget, why is this also important? So why is organizing your financial documents really critical in addition to creating a budget? What do you guys think?
You have to know where you are to know where you're going.
Yep, that's a really good one. What else?
Well, creating a budget. Hi, Dr. Brantley, Cecilia. Hello, good morning, everyone. Hi, Silk. I think when you have a budget, you don't overspend. Or if you have a budget and you see that it needs adjusting, then you at least have a reference point from where you are, because things do change, and inflation.
Yep.
So you want to be able to have a starting point, as Silk said, but then you want to be flexible to see if you need to look at other research material that can give you additional information to make adjustments when necessary.
Yep. No, I love that. I love that information as well too. And I agree with you. As the years go by, when you have your financial documents, things can change throughout the years. So you definitely need to adjust to those changes, and you need to make those changes to be able to get to the point where you do want to retire. What's another reason why you should have your financial documents organized? What would be another reason as well too? So I'm going to share with you guys one additional reason. So earlier I talked to you about the premier banker and the financial advisor, how their client knew that he was not doing well. So what he did was one advice they told him is to organize your financial documents so your family can have access to those funds as well too, or to have access to everything. So they know exactly where's what's at. So I'm going to give you guys another example. So years ago, I had a client. Now in my position, I really don't work with clients one-on-one like I used to. So I do have a handful of clients that I've been working for many years, and I still help them out here and there. But I have a specific client that years ago that unfortunately he was not doing so well either. And what he did was he organized his financial documents. He organized his income, his assets, but he also organized his debt, his monthly payments, where everything was going. And the reason why he did that was because he wanted to leave it to his wife so she can take care of herself. His wife never did any of the finances. He did the entire thing, and he was really concerned about that. Well, she reached out to me, and the reason why she reached out to me was because as the client was not doing so well, he gave her my business card and said, reach out to Edwin for any questions you have. He'll help you out. So when unfortunately when he did pass away, she reached out to me and told me what happened. And I basically was helping her. Luckily, he had everything organized. I was able to help her by telling her exactly what to say to the other banks, helping her organize her bills where she was able to make those payments on time, making sure that she was paying everything correctly, where she wasn't falling behind. She was really concerned. She was really really stressed out about everything. But as the months went by, she became an expert. She did everything, and now she's doing a really great job with her finances as well too. But the fact that her husband organized all the financial documents for her really helped out big time. Because had he not done that, then she would have struggled a lot more than what happened as well too. So wanted to bring to your attention that it's really critical that you do organize your finances. In addition to budgeting, is also to help your family in case something ever happens as well too. How can I free up funds?
I have a
Well-
comment, if that's okay.
I'm sorry.
I have a comment, if that's okay.
Oh yeah. Please, Cecilia, go ahead.
I thought that was an excellent statement that you made, because we work with seniors, and of course we're all going to pass this earth one day. But the point is, when you are, just for an example, like you mentioned, the couple in a relationship, you usually have each of your functions, that you handle. Like someone does the cooking, someone does the driving, blah, blah, blah. And I think it can go in various areas, meaning that whatever your significant other does, it's good if you prepare, each other for learning how to do what the other person has been handling. Because, let's face it, we don't always leave this earth together at the same time. And then when that happens, it can be overwhelming to cross over into other areas that you originally wasn't handling. For example, my husband has kind of like pre-retired, and he drives me, I'm not complaining, but he drives me everywhere. And I have my license, I can drive where I need to go. But if you don't continue using certain skills, and you're all of a sudden thrown into it, whatever it is, it can be, overwhelming. So I thought that was a really good suggestion. You got to figure out who you need to go to, and the fact that the husband thought about that and had it all laid out was just, really, really special.
Yeah, no, I agree with you, Cecilia, as well too. One of the biggest ones that I see that people don't have organized is the beneficiaries. There's a lot of times when, unfortunately, someone passes away unexpectedly.
Oh, yeah.
Yeah, and the family comes over, and now they're trying to get funds from the person, and there's no beneficiaries. So that's when it creates a big hassle. So that's one thing that as we see people who are getting ready to retirement, that's one of the things that we do bring up to their attention is, who do you want as beneficiaries in your accounts as well too, and be cautious about who you put as beneficiaries in your accounts as well too. Oh, no, I appreciate that, Cecilia. Thank you so much. How can I free up funds? Well, obviously the biggest one, how you can free up funds, is cutting expenses. Reduce spending. Price shop for services. A lot of people don't realize, like, for example, price shop for services is the insurance. As the years go by, sometimes we see our insurance going up. But that's something you can definitely shop around for as well too. If you feel like your insurance is really high, then you could probably talk to another insurance provider and see what they can offer you as well too. Think about a new job. That's another way to free up funds. And a lot of times we might be overqualified for a position. So think about, what you're doing right now in your job. Are you overqualified? What are you good at? What do you want to do? Consider freelance or gig work. I know a lot of people that have multiple jobs, and they're doing their second job is because they enjoy it. They enjoy doing their side job, in other words, as well too. So that's one. There's a couple ways of being able to free up some funds. Now there is the most common rule, 50-30-20 budget rule. Has anyone heard of the 50-30-20 budget rule? So this is the most common rule that in finance. It's using the 50-30-20 rule to create your personal budget. Now, what it says here is when you use the 50-30-20 rule, it's 50% goes under needs. The needs are, for example, your mortgage, your bills, groceries. Those goes under needs. So 50% of your income should go under needs. 30% of your income should go under wants. So under this rule, they're not saying get rid of wants, not at all. You can still have 30% in the wants, which is obviously eating out, shopping as well too. And then 20% should be going under savings and debt. Now, when it says debt, they're not talking about the minimum payment. They're talking about anything you pay above the minimum payment. So anything you add to principal. It should be going into the 20%. Okay. Now I'm going to give you an example here of Martha. Martha, who earns $2,000 per month. Which okay, so Martha, what she did was she broke it down. In her wants, she has coffee, $40 for coffee. Restaurant, $50. Entertainment, $40. Clothing. And salon for $100. So she has $330 in her wants. In her needs, she put down rent, $600, groceries, $200, utilities, $75, car payment, $240, car insurance, $120, transportation, health insurance, and internet for a accumulation of $1,485. Now, what do you guys think? Is Martha doing a good job with her 50-30-20 rule, or can she do some changes? What do you guys think? So if she has 1485 in her
She can make
needs,
changes.
yeah, she can definitely make some changes, because if you think about it, if you add the needs and the wants, it comes out to $1,815. So that means that she only has $185 available. So, but if you take a look at this, you're going to notice that there's a couple things that she did not add here, and maybe she doesn't have any. One is credit card payments. Another one is her cell phone. Maybe she doesn't pay for cell phone, but if she was to pay for credit card, if she was to pay for cell phone, then that's going to eat up from her $185. And even if she only has $185, that's still not sufficient enough to be paying any principal of the debt or saving enough money as well too. So there are some changes that she can definitely make. So if I was to look at this, maybe perhaps, like, for example, rent $600. We all live in the Chicago area. $600 is really good. Groceries $200. But if I was to look at her car insurance with the car payment, and then she still is paying for transportation expenses, I'm assuming transportation expenses $80 is gas. If it's not gas, then it's okay. But car payment $240 and car insurance $120. When you think about it, that's $1,440 in car insurance an annual basis for a car payment of $240. That might be a little bit on the high end for a car that she's only making a payment of $240, unless she's leasing it. But if she is leasing it, then she should definitely needs to make some changes with her car payments as well too. Groceries $200. If she has kids, or a husband, maybe $200 is good. If she's by herself, I'm not 100% sure if $200 is good or not. Maybe she might want to consider removing some of her wants, $100 in clothing on a monthly basis, or maybe even the restaurants. If she's already buying groceries, does she really need to go to a restaurant every single month? She might need to start cutting some of her wants, even though she's doing a great job on her wants. If she cannot make changes with her needs, she might need to start looking at her wants to be able to save money for her future as well too. All right. Anybody? Oh, so when you guys go right after this presentation, or maybe even tonight, take a look at your personal transactions. Take a look at and put them into your needs, put them into your wants, put them into your savings buckets. Take a look to see how you're doing compared to the 50-30-20 rule. Is your wants high, or is your needs too high? And can I figure out ways to reduce my needs, or figure out ways to reduce my wants so I can increase my savings and debts? Now, 20% for everyone is different. Some of us might have kids. Some of us might have extra responsibilities that we might not be able to afford 20%. Some of us might be single, where we can actually do more than 20% as well too. So for everyone, I mean, the 20% might be a little bit different, but the overall, if you stick to the 50-30-20 rule, is definitely a good budget rule that will help you save money for your future as well too. Okay. Now, there are two different type of, well, there's more, but these are the two common ones, debt repayment strategies. The first one is the avalanche method, okay? The avalanche method says that pay off debt with the highest interest rate. Now, financially, obviously that makes sense because as you're paying the debt with the highest interest rate, you're paying less in interest on a monthly basis. So if I was to look at the square on the right side, the one with the highest interest rate will be A, major credit card, 26% for a balance of $3,000. So if I was to follow the avalanche method, I will be paying off the interest, the major credit card, with the interest rate of 26%. Now the snowball method, that one says that you pay off debt with the lowest balance first. So if I was to look at the right side, it will be my retail credit card with $800. But let's assume that the student loan was the one that had the lowest balance. Let's assume the student loan was $800 rather than the retail credit card. Why? So this is a question for the group. Why would we follow the snowball method, even though it's a 5% interest rate? Why would we follow the snowball method to pay off the student loan? What do you guys think? Why would we pay off the student loan if it has the lowest interest rate but it has the lowest balance if we follow the snowball method?
I think it gives you a feeling of success and, you know, just to check something off and get it done immediately. Personally, it would motivate me.
Yes.
And let's take the student loan. Well, that's an important bill, I know personally.
Yes, that's exactly what it is, Cecilia. It's the feeling of accomplishment. One less payment on a monthly basis, and that's the result. Is feeling good about what you have achieved, that you were able to pay off your student loan as well too. And that's again one less payment that you have to worry about on a month-to-month basis. But yes, that's exactly what it is. It makes you feel good. It makes you feel like you accomplished something as well too. Okay. Now, how would you deal with an emergency? Show of hand, well, obviously not show of hand, but has anyone experienced financial emergencies they would like to share? And what did you do to deal with it?
Financial emergency can also be, for example, you driving along and your car breaks down. Now, because I have an emergency fund, it's not my savings or retirement fund, it's an emergency. Yeah. So I can go to my emergency fund. I can get my car repaired and I'm off and rolling again. But if I didn't have that emergency fund, it's like, okay, Am I living paycheck to paycheck? Do I have to wait and get paid? Do I have to borrow the money? But that's where the emergency fund would come in handy.
Yep.
And that's where you don't have no stress, even though you don't want to spend that money. But that's why you have emergency thing put up to the side.
Yep. Yep. I agree with you there. You mentioned paycheck to paycheck. I don't know if everyone knows this, but 60% of adults in the US are living paycheck to paycheck as well too. And as you mentioned, an emergency can occur anytime. In the last few years, people realized how critical it was to save money, how critical it is to have an emergency fund. In the past, we always have people that will go to a bank and not necessarily open a savings account, but just open a checking account. And one thing they always kept on saying was, well, my money's going in and my money's going out. Money's going in, money's going out. I don't have time to save money. I'll save money later on. Well, now we do have a lot of people that are definitely opening savings accounts because they realize how critical it is to save money in case of emergency as well too. You mentioned earlier, Silk, about someone hit your car. Last year, that's exactly what happened to me. As I went into a branch, as I was inside at work, someone hit my car as well too. They scratched the whole entire left side of my car. Sure enough, I took it into to take a look to get an estimate, and unfortunately, it was a hit and run. So I obviously had to endure the entire payment as well too. And luckily, it wasn't drastically a lot, but it was still $2,000. It was actually $1,900 that I had to come out, that I had to figure out how to pay as well too, unfortunately. So emergencies do happen, and by utilizing your emergency funds, you're able to sustain that as well too. The average emergency financial shock is $2,000. Aim to save at least 3 months of living expenses. To be honest with you, when I'm doing presentations, I usually tell people 6 months. 6 months of living expenses. Remember to get insurance. The reason why I say 6 months is because you never know what could happen. Sometimes we might decide that we no longer want to work for a company. We might take a month and a half. By the time you get hired with a new company, it can probably take you 3, 4, 5 months as well to start working with the new company as well. So that's the reason why I always say at least 6 months as well. Strategies to free up funds. Tips for spending and saving. Review subscription. Nowadays with internet, not sure how many people actually out there have subscription, but I guess you could have subscription online. Shop around. Check for clearance aisles. Let me go back. Shop around. I was actually at a networking event 2 weeks ago. The person on my right side was talking about how she received letters from her insurance company that they were going to increase it by $250 more than what she was originally paying. Obviously, that was a concern for her because it was $250 more every 6 months. So that would have been over $500 that she would have been paying on an annual basis. So what she did was she did shop around, and she realized that by shopping around, she was able to get an insurance that it was able to help her pay less than what she was currently paying. So definitely shop around. Check clearance aisles, as I mentioned earlier. Check markdown sites. Buy in bulk. Now, buying in bulk can also be a little bit concerning as well too, because it's not going to be good if you're not going to use it all. So sometimes we do buy in bulk because you get more for your buck. But sometimes if you buy in bulk and you don't use it and you allow it to expire, then it wasn't a good idea then. Get it when it's hot. This actually can relate to me. There are times when my wife comes up to me and tells me, hey, we need to buy this because it's on sale. And my thing is always like, well, we technically don't need it at the moment. Why do we need it? And then 6 months go by, and I tell her, hey, I need this. We should go buy it. And now you want it when it's not on sale. So get it when it's out. Sometimes can be really beneficial. You might not need it now, but you might need it later on. Rules for deals. Check expiration dates. Yeah, definitely check for expiration dates, because it might be on sale for a reason. So definitely when you buy something that's on sale, check the expiration dates. If you buy something that's expired, might not be, it's definitely not gonna be good for you. Look for defects and damages when rules for deals, shop around. Also focus on, will you use it and do you need it as well too. Don't just buy something just because it's hot. If you need it, if you think you'll need it in the future, definitely buy it. But if you think that it's not something that you're going to use just because it's on sale, doesn't mean you need to buy it. Strategies for sticking to a budget. Okay, so focus on rewards versus punishments. Make it automatic. Create buckets. So earlier we were talking about the buckets as well too. The short-term, midterm, and long-term. And then the other one is get real-time spending feedback and set yourself reminders as well too. Someone earlier mentioned that there are times when we're sticking to our budget, but we need to make changes to our budget. And the reason why is because something changes in our life that we need to make those proper adjustments. But by having the financial documents with us and by looking at the overall picture or where you're going to want to be at, you definitely you can make those changes. And this is the reason why it's also really critical that you do talk to your reps consistently, because again, things could have changed. Maybe perhaps the growth on your retirement wasn't where you expected it. Now you need to make those changes to get back on track as well too. Don't forget about your financial institution representatives. So whether you bank at XYZ Bank or another bank, make sure that you talk to your reps. It's really critical. Get to know your reps, especially if they have a premier banker or they have a private banker. Those tend to they tend to give them one-on-one attention, and they usually partner up with a financial advisor as well too, to be able to give that one-on-one attention. Christina, are you out there by any chance still?
She had to leave. She put a note in the chat.
Okay, perfect. Okay, she did tell me that she had a client coming over that she might have to leave. But again, it's talk to your financial rep, talk to your person, talk to your premier banker, see what they can do, see what they can help you out. Make sure that you're consistently talking to them, either once a year or or every 6 months. But if your bank is not giving you that attention that you need or that support that you need, as Silk mentioned earlier, she banks with multiple banks. I mentioned that earlier as well too. Talk to another bank, see what they can do for you. See if they can provide that support that you need, because not every bank is the same as well too. So I wanted to share with you guys a couple of Christina's information in case you want to contact her. Christina is a person who spoke earlier. She is the senior premier banker at one of our locations. She works really close with Nathan Cluxton, who is the senior financial advisor as well too. And then Annabelle Alonso, she is a retail relationship banker. Unfortunately, she wasn't able to make it, but she is a banker in one of our branches as well too. And she also works with Christina and Nathan as well too. But I want to share with you guys some information out there as well too. So the summary, and I'll go back to the names later on. But in summary, one thing I was hoping for that you guys would take out of this is awareness. It's expect the unexpected. It's budget to pay off debt and save for your future as well too. Because there are a lot of times when something could happen, and we always have to expect the unexpected and just prepare for it. One thing that I personally do is when I fly somewhere, I have a folder of my finances, and the reason why I have that is because in case I'm flying somewhere and something happens, God forbid something happens to me where I'm in a different country or I'm in a different state, I tell my children where to find that information as well too. If something ever happens to me, they know where to locate the finances as well. So I mean, for me, it's really critical that people organize their finances and create a budget and just expect the unexpected and just be aware that that things can happen and save money for emergency. Okay. But at this point, I know we have 10, 15 minutes left. Wanted to leave it up for questions that you guys might have that would love to answer, or anything else you guys want to share with the group as well too.
I have a question, if you don't mind, please.
Sure, no, not at all. Go ahead.
What about the information on debt consolidation? For example, getting a loan to, cover all of your major expenses only because they offer a lower rate. What is your thoughts on that strategy?
I'm going to give you guys an example of what I personally have seen as well too, okay, in banking. Now, if you're the type of person that likes to, if you have self-control, then I definitely strongly agree with it as well too. So for example, it really depends. Now we do offer products that do have much lower rate than credit cards. There's a lot of people that bulk up their credit cards. Credit cards can be in double-digit interest rates. And there are products out there that the bank does offer that has they're in the single interest rates. They're like 5, 6, 7%. So if you were to utilize that line of credit to pay off all this credit card debt, then that makes sense as well too, right? Because now you're paying lower interest rates instead of paying those 20%, 15, 26%, as I shared with you guys earlier. So it does definitely make sense. Talk to your bank, find out what kind of products do they offer to be able to get a product that you can do debt consolidation and make those payments a lot sooner. Now, here's the biggest concern. When it comes to debt consolidation, there are some people that unfortunately might not have self-control, where instead of closing out the credit cards or putting those credit cards with a high interest rate on the side, they might tend to fall back and utilize those credit cards. So now you have this debt that you did the loan for.
Yeah,
and
wow.
Now you're increasing again your credit cards. So there was no benefit to that.
Right.
So that's when you fall into that trap where now you put yourself in a worse position.
Right.
So if you were to do debt consolidation, think about what you're going to do with the where you accumulate that debt, and think about if you really want to put yourself in that bad position all over again. Now, don't get me wrong. If you close out your credit cards, that can also have a negative impact on your credit score as well too. So just keep that in mind. So this is the reason why.
I just wanted to say, just want to interject when you said, and that was critical. Don't close out your credit card because you want to show your credit history. That you're paying things off on time, and that'll boost your credit. But I also want to say, when you do a debt consolidation, if you have sources you can go, for example, as a homeowner, they have
I'll make your line of credit.
Yeah, they have equity or line of credit. Do you know offhand, just in general, which would be a better approach? Just getting a loan or using your home equity versus let's see, what am I saying? You're right.
Unsecured loan.
Yeah, and I know that if you don't pay your loan off, you don't want to lose your house. So there's always a caveat in both ways. But I was just wondering which approach you think might be good.
So this is the reason. So before I answer that question, it's really critical that we do sit down with the banker and have that holistic conversation to get the bigger picture of where your finances are at and which option is the best option for you guys. So just keep that in mind. This is the reason why we ask a lot of questions when you sit down with us, because we would definitely want to have that holistic conversation with you and figure out which one is the best option. Now, this is what I'm going to tell you. I'm going to give you so with a unsecured loan, those tend to be a little bit higher interest rate than a home equity line of credit. A home equity line of credit, usually because there's collateral involved, tends to be lower interest rate than unsecured loans. So if you're going from a high interest rate to an unsecured loan, the difference might not be that beneficial. There are some benefits. The fact that you don't have all these multiple payments going everywhere, you have just one lump sum payment, which can definitely help you out. but a home equity line of credit usually has a much lower interest rate than unsecured loans. So for the most part, I would tell you without even asking you questions over the phone, over Zoom, it's that a home equity line of credit might be the better option, but we would have to have that holistic conversation and figure out which one is the better option. There are a lot of times when people cannot get a home equity line of credit, and so would a unsecured loan be a better option? Yeah, but it really depends. We would need to look at your overall picture to see what is the best option for you. Maybe perhaps it'll be transferring it over to another credit card that has a 0% interest rate for 18 months. But we would need to look at your overall picture to see which option is the best option for you. But am I a big believer in home equity line credits? Yes. There's a lot of different reasons to use a home equity line credit. I personally have a home equity line credit. I strongly believe that home equity line credits are good. But again, it depends how you use it as well too. Especially if you have self-control, it is important to have self-control.
I do. I exercise regularly, and that takes a lot of self-control.
Yeah. And then like you shared earlier, if you do cancel those credit cards, the history, it's because if you were to tell me, for example, because a lot of times to apply for mortgages, to apply for some lending products, the banks do look at your overall history of your credit. So if you start canceling these credit cards, and now you don't have that history showing that you have been you have a history at least of 2 years, some banks might not offer you a loan as well too. So you do have to show the history.
Yeah, and then quickly, I know you have to have, if possible, a good credit score. So I want to say that. Yeah, credit score.
For a home equity line credit?
Well, I'm just saying in general, when you are, purchasing something and then even getting a loan, I think your credit score allows you a lower interest rate.
Correct. The higher the credit score, the lower the interest rate. So yes, you're absolutely right, Cecilia. The better your credit score, credit score is a presentation that I do as well too. And that's exactly one thing that I do point out is the higher the credit score, the lower the potential, the lower interest rate you're going to have as well too.
Edwin, can I mention something right quick?
Sure.
We plan for living, but we don't plan for when we leave this earth and making sure that our family is taken care of. But just a note, if there's anyone that hasn't done this, take the moment out to write down your make, model, license plate of your car, get all of your important documents like your job, things of that nature, because I had a friend that passed unfortunate. Her parents didn't know anything about where she worked for, the address. They didn't know the make, the model of her car. So all of these things are important, but guess what? If you don't share the information with your family, they not only are they going to grieve, but it's a lot of things that's going to happen that they're going to be, and you shouldn't have to worry. It's bad enough when you grieve. So if you got important information, share it with your family. Let them know. And if you're an organ donor, let your family know that you're an organ donor. Because you got to find the will if you're in the will. And if you put it on your driver's license and you haven't explained that to your family, they'll never know. And then they're left in shock.
I agree with you 100%. Similar to that story that I informed you earlier about my clients, and they passed away, and luckily he provided all the information, all the financial, not just the assets, but the debt, everything he could think of to his wife, and which made the transition a lot smoother. But when you do have all that stuff organized, you are leaving behind a better path for your family who is in need as well too. But yes, and I do see it all the time as well too, where customers are calling. Actually, I want to say non-customers. They're calling the bank because unfortunately someone passed away, and they just want to find out if their family member has funds in their bank who just passed away. Unfortunately, that is not something that we can provide to you. So even if you were to call the bank and say, hey, look, I have my significant other's social security number, I just want to find out if they have an account with you guys, that's not something we can provide you. So even if you were to provide us name, social security number, that's not something that we can tell you because it's it's personal information that we're not allowed to share with you guys. Any other questions or any other comments as well too that you guys want to share?
Thank you very much. Thank you very much.
Thank you so much. Thank you everyone for answering any questions or for providing your feedback as well to your comments. I love it. But if you have any other questions, I provided Christina's information here. I provided Annabelle's, Alonso's information, Nathan Cluxton's information. Please feel free to reach out to them as well too, and they'll be able to provide you any resources that you're needing, and they'll be able to answer your questions as well too. So thank you everyone for joining.
Thank you, Edwin.
Thank you.
Thank you.
Thank you, Elderwerks.